Bitcoin's rebound over the weekend wasn't a recovery. It was the calm before the next detonation. Something is breaking underneath the surface. Bitcoin itself has now snapped a correlation with risk assets for the first time in months. Ethereum is losing its altitude. Altcoins are completely frozen. And all this is happening as we enter the tightest data window before Thanksgiving, a wall of delayed economic releases that could flip Q4 on its head in a matter of hours. This is one of the rare moments where the entire market goes silent right before the next violent move. Most traders are asleep at the wheel. We are not. Welcome back, Crypto Crew. It is your boy Tom here bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. Share us with your friends. We're trying to build a huge trading community. And also make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. All right, let's get right into it. We got a lot of stuff to cover today, a lot of stuff. So get prepared, strap yourself in, get yourself a coffee, because we're going to break it all down. Because I had to look to equities to find out, like, to try to get an idea, a handle on what the heck is happening right now. We know the reasons why Bitcoin's down. I'm going to reiterate some of those now, and we're going to get into like what we have to see. These levels that we're at right now, and when you get into that 2-hour chart, you know, there's a couple of 3 reasons you got to pay attention to this chart that I'm going to be showing you. So get your number 2 pencil out. You got to write down some levels, because if you're going to day trade this thing, you're going to need to know these levels. And believe me, my levels are really good. They're not just horizontal lines on a chart. They're actually really good reactionary points that a marketplace reacts off of. Now, let's start with the most important development of the week. Something you can literally see when you look at the Nasdaq weekly against the Bitcoin weekly that we have up here right now. The Bitcoin has officially broken correlation with risk assets for the first time in months. It's not noise, it's structural. So for nearly the entire year, Bitcoin has behaved like a high beta tech stock. Nasdaq up, Bitcoin up. Tech futures rally, Bitcoin rallies. Risk on sentiment, Bitcoin surges. That's a positive correlation and has been one of the most reliable relationships in macro. Now, this relationship has snapped. So Nasdaq futures were green. They were up nearly 1% at one point. Broad equities are rebounding. Risk appetite was improving. Bitcoin, flat, down, hesitating. Now, that correlation breakdown, Bitcoin is ignoring the macro signals that normally drive it. So what's up with it? Why? Well, one of the keys is we look at MicroStrategy. Okay, what's happening with strategy? Okay, this is something that fits perfectly into this correlation break story that we've been seeing all along with NDQ and Bitcoin itself. We were expecting the same exact type of pump that happened with NDQ after Bitcoin's got the same drop, right, from the same point. Now look what happened up with NDQ, right? But we got the decoupling. So now if we go a little bit deeper and we look at strategy itself, it's the third time in 5 years. Each time marked the bottom for Bitcoin. Each time this front ran the trend. Now, this should make every trader sit up and pay attention at this point, because here's the truth. Smart money doesn't wait for Bitcoin to pump. It doesn't wait for dominance to reverse. It doesn't wait for X to celebrate breakouts. Smart money buys when the Bitcoin proxy is still bleeding, not after the reversal. During the setup for the reversal. That's why we were talking about some dollar cost averaging in yesterday's video. Okay, now look, get into our pro group, and you'll be able to basically see exactly how we're deploying capital. We're not saying that you should deploy it the same way. Okay, so right now MicroStrategy is hitting the RSI zone for the third time in half a decade. It really puts it in an elite company right now, because right now 2020, 2023, and now in each instance preceded a major inflection in Bitcoin. This lines up perfectly what we're seeing right now. Okay, we're seeing Bitcoin decoupling from the Nasdaq, which is what we just brought up in our open here, which is very important. We're seeing crypto microstructure stress, liquidity is thinning, and now the Bitcoin proxy quietly flashes a bottoming signal. Now, is this the bottoming process that's bubbling beneath the surface? This is what I looked at. I said, something's up here. Okay, and you couldn't script this confluence better. So now we have to dig a little deeper and we have to put our thinking caps on, right? And we got to ask, why does this happen? Well, there's a couple of three big institutional reasons. I like that. A couple of three, okay, big institutional reasons. We got internal crypto stress. So the market's dealing with its own problems right now. Why? Because I went back, I looked, there's a huge cluster of longs around the $90,000 breakout. All right, now, many traders used leverage for this. Okay, yeah, they were making some good money, but they didn't enjoy the party. They didn't dance near the door at the 118, or I'm not going to say they sold 126. Let's not be ridiculous. Let's just say 118 was probably, a break of 118 was probably a good place to actually pare down. We were still gung-ho, yes, all right, but, we started getting a little nervous when we couldn't break 106, right? But price dropped below their entry right now, so margin calls hit. Every bounce gets sold into right now. They're trying to get out. That's why these points that are happening right now are very important. So Bitcoin doesn't care about equity strength when its own house is on fire. Just doesn't. Now we've had a liquidity withdrawal. Crypto liquidity is thinner than equity liquidity right now. We could look at that IBIT stuff, right? We got to pay attention to IBIT. And there's the good old IBIT chart. We told you got to watch that. Got to get back over 50. If not, we're going to ugly town. Okay, if we break 46, we're going to ugly town. Okay, so right now that we got to pay attention to that too. So liquidity is thinner than equity liquidity right now. That is for sure. ETF outflows still continue. Funding is flipped. Market makers reduced inventory. Stablecoin liquidity has dropped. Thin liquidity amplifies moves and distorts correlations. So that's what's happening. Now we got divergence, catalysts that are happening right now in Bitcoin itself. Okay, stocks are rallying on like the shutdown optimism. It's over. They're all happy. Yay! They're throwing a party on good old time Wall Street. Yep. Rate cut expectations are kind of dimmed, but now this data that's coming out could reignite those. So what we're in right now is a dangerous area, that's for sure. I mean, nothing like this. This is a perfect storm, man. I mean, a perfect storm. But anyway, we got solid tech earnings. Now, Bitcoin's trading on what? Forced liquidations, unwinding of overbought conditions, no fresh ETF inflows on purpose. On purpose. Remember, we discussed this. We're talking about BlackRock, Vanguard, State Street. They want to control the rails. How do they control the rails? They pull out and then they reset and they resell to their clients at lower levels, the Bitcoin and Ethereum funds. So they have stopped. Well, all right, yeah, I would say that 93% chance that they told their desks, do not pump Bitcoin right now. Don't do it. Let's let them eat themselves alive. Let's get it cheaper. Then we could pump it and sell it at 93, 95, 100, 105. Guaranteed they pulled out. They are skunks. That's the best way I could say. But right now, we got different catalysts, different outcomes that are happening because we got, again, no fresh ETF inflows. We got risk parity de-risking itself right now. So the different catalysts equal different outcomes. Now, here's why it matters. Whenever Bitcoin breaks correlation, it's because the market is building pressure for the next expansion. Now, that could be up or down, okay, right now because of what's going on, all right? So this is really, Bitcoin is flat while stocks rise. that pressure is even higher right now. So this is really the quiet before the break. Now let's get into the 2 hour, because as I said in the beginning, this 2 hour chart is so important for us right now. You may think that it's not, but we put out a warning on X earlier today. Hopefully you saw it. We said don't buy the breakout up at 88, 89, because we needed to fill the CME market gap, and actually we did fill it right now. So now we cleared the CME market gap. So it's done for us. Now let's get into what's happening right now. Right after this 26% nuke, all right, everybody's screaming for a lower retest, right? So we can't get trapped. We got to actually navigate this, and you got to be patient. You can't just chase green candles or red candles. You got to really trade it. So here it is, a very, very important levels. We're coming over to the 2 hour chart. All right. Good old Tom gave you the level up top of the 87,405. Okay. Now, a lot of people are calling this a dead cat bounce right now. Okay. The bears are all excited about it. Saw the comments on our video. Yeah, it's a dead cat bounce. Now, we jumped $4,000 off the lows. It eased some fears at the last week's washout. It was actually good to see that some dips were being bought. Remember the criteria of a bear market. Dips are not bought. So things are happening right now. Okay, I'm not saying put on the party hat. I'm not saying that at all. We got to get through a few specific points. But the bounce right now, faded kind of quickly today in today's session, but we have not broken critical levels yet. I'm going to give you the critical levels right now. Right now we're trading right around 86,000, flat on the day. We're still down 32% from the all-time high of 126,273. Like I said, a lot of guys are calling it a dead cat liquidity bounce. Now, here's the points. You basically see the beginnings of a potential base building here. All right. Now, the main support of the whole thing is down here. Okay, 78,184. Okay. Critical support is that 80,000, 82,000, and then this level right here, 80,600. All right. Now, so since we rallied up to the top of this tine right here, okay, 87, the main level of support right now becomes 84,700 or so. Like, let's go like right here, 84, like I just had it there, right there. That is an important structural point right now. So what I'm saying is this. We got plenty of time before December 1st, man. I mean, we got some time because we're waiting for that because of what? The quantitative tightening will end with the Fed. Now, we need some good numbers that come out that could actually shake this marketplace up, but we have to just trade this. Okay, so right now, this level is very, very important because if we break the 84, say 84,700, okay, we're going to be drifting down towards this low right here at 83,000, and then the all-important, really short-term support point at 82. Now, if Bitcoin can start to recover from here and start to build a base, so in other words, let's say it comes down, it comes within a cat's whisker of this, then comes back up, and then breaks this top, okay, we're probably going to test the 91,000. All right, now, that's a very, very important point. I discussed that with you in previous videos. That was the point where the marketplace actually broke up to 104,000. And then once it broke that, it went back down to the lows at 74,000 before we had the rally back up. That was February of last year. Okay, so in 1 year, we're almost back to where we started from. We are back to where we started from. So now, right now, if we look at this, the equilibrium actually that precedes big directional moves is in play right now. This marketplace is going to be tough to navigate, okay, because of what's happening, all the news that's going to be coming out. So these are the points you got to pay attention to. 84.7. Okay, if you break that, possibly we could drift them back down towards that 82. Now, since we made this high here at 88, Yeah, 82 is actually the most important point that has to hold. Now, I would like to see it starting to gain some strength. So, in other words, we could do something like this also. Okay, we could come up again. We could pop into this. We could break this. As long as we don't break the 82, we could have the scenario where we come back up and then test this point and get up higher. Now, that's terrible. But anyway, as that stands itself, we just got to trade it, right? So here are your most important points right now. All right, 78,000, like 200 main support. Critical support is at 80,600. A reactionary floor is right around 82. Okay, immediate resistance right now is 88,000. Major resistance short term is 91. If we could break through that, we're looking at 95. But it's going to have to be traded, ladies and gentlemen. It's going to have to be traded. So now, Bitcoin struggles, even though equities are green, because many traders bought that $90,000 breakout. A lot of them used borrowed money. And now they're underwater and they're facing margin pressure and they're selling every rally right now. So that's what's happening. We got to clear them out. Matter of fact, I saw somebody on our Telegram basically said there's only 900. I think they said 900 million left in upper liquidity or something like that. I mean, I don't know where he came up with that number, if that's the right number, but that's what they were talking about on liquidity walls itself. Was it 90 million? Maybe 90 million, not 900 million. Sorry. Anyway, so right now, if we look at Bitcoin where we just completed, right, that 36% correction so far, okay? If you look at it, the structure is clear, right? Bitcoin's completed the 36% drawdown. We could go down to 40% because that's what happens. Every major bull market in Bitcoin history has included a 30 to 40% retest mid-cycle. People only remember when it goes from the low to the high. They don't remember all the pain in between. So every major bull market basically has the breakout, the euphoria, the leverage, the liquidations, the reset, and then the expansion again. This is like a reset phase. It's how the market clears trapped longs and resets momentum as long as we hold the 78,000. Now, if I come over and I bring in, the MACD, this is the part that really, I'm sure other guys are going to use our stuff because Frank does a wonderful job with this stuff. But, on the higher time frame, right, we're looking at the daily here, Bitcoin's MACD is now at the lowest level in 5 years. The last time Bitcoin hit a similar MACD level, the market followed with 119% rally. Now I know my guy. He's sitting there listening to this right now. He's gonna be like, "Tom, we're going down. We're going down." I got to get his handle down. I see him all the time. I smile every time I see him when he posts. I go, "All right, he's still involved, which is good. He's involved." All right, so MACD doesn't bottom like this in the middle of a trend. It bottoms really at cyclical turning points. And it's where reversals are born, right? So here's a mental note for you traders, okay? The easiest part is really buying or selling a coin. The harder part is making the decision when to close the trade. That requires, a recognition of some trade-offs, right? If you want big gains, you got to sit through some nasty pullbacks. If you want to reduce your drawdowns, you sell into strength when you're long and you buy into weakness when you're short, and you cut your loss as quickly as possible. That's a proven strategy to achieve that. Now, these are approaches that we use in our pro group. You could join for free. Link in the description. All right, now comes into the point where we got U.S. data flood that's going to be happening, and we're sitting on Occam's razor right now, man. All right. Maybe not Occam's razor, but we're sitting on a razor right now. We're heading into one of the tightest macro windows for the entire year. Because of shutdown and reporting delays, we got a full cluster of U.S. economic releases about to hit in the next 48 to 72-hour burst. Labor numbers, jobless and continuing claims, ISM, which is very important. We showed you that chart. We want to see a big tick up in that ISM. That's good. We got inflation fragments. We got consumer metrics. We got treasury balance updates. We got forward Fed indicators. This normally drips out over weeks. This time it's landing all at once, right as Bitcoin sits in a fully reset technical structure. If this data leans even slightly dovish, where the yields drop, the dollar weakness, that's another thing we got to pay attention to. We got to make sure the dollar actually starts coming off a little bit. Okay? We got liquidity expectations rise, risk appetite improves. Bitcoin is going to react the first and the fastest. So, my little bear friends, if you're not on your toes, I suggest that you get on your toes because it ain't going to be easy, right? You're sitting there wallowing, yeah, this is great. Tom's going to be, he's going to be wrong. He's going to be singing at 65,000 soon again. I don't know about that, man. I don't know about that. But look, I'm setting the stage for both ways, okay? But Bitcoin always leads liquidity before equities. So, but here's the key: this damn thing could break either way, because if the data comes in hot, where we got strong labor, sticky inflation, firmer manufacturing, rate gets pushed out. Rate gets cuts get pushed out a bit, yields rise, dollar goes up. Bitcoin could retest the lows before the reversal kicks in, but. Again, you got to pay attention to the flip side. The data cools, weak labor, rising claims, softer inflation, rate odds surge again, and that's when Bitcoin can actually already ignite from this deep reset that it's had. So this is why this setup is so asymmetric. Equities haven't reset, Bitcoin has. Now, we know, like Bitcoin itself, we said it's down 36%. Right? MACD, 5-year washout, leverage cleared, correlation broken, MicroStrategy flashing itself in a buy zone area, right? Whew. So Bitcoin has room to move up and equities still have room to come off. So this is exactly how major reversals start. Now let's get into Ethereum, all right? Ethereum itself. Let's check out all the Ethereum. Right now, Ethereum is at critical levels. We said this, okay? Right, it's trading at 2008, which is good. Needs to get over 3,000. That would be nice. 3,300 would be great, right? It's still showing, it's not in the driver's seat. It's basically co-pilot to Bitcoin right now, as everybody is. Now, Ethereum slipped a little bit today, but the bigger problem is like the Ethereum Bitcoin ratio. It broke trend. Now, it failed to reclaim the key levels from that. So it's signaling that Ethereum is still not ready to lead yet. So Ethereum's lack of leadership is why alts are frozen. Okay, so if you looked at like the Ethereum Bitcoin chart, you got the lower highs, you got the failed retest, the breakout structure. This keeps money defensive. So the key levels in Ethereum right now: support 2,650, critical support 2,550. Resistance right now, 3,000. Major resistance, 3,200. So Ethereum is in a holding pattern waiting for Bitcoin to stabilize. Now, we showed you this chart. I mean, Ethereum is in, we're waiting for the upgrade, right? That's the wild card of this whole thing, that the marketplace seems to kind of have discounted. I don't know why, but they have. So if we look at Ethereum, also, it's a perfect wave setup. Wave 1 was the ignition. Wave 2 is correction, which is happening right now. Wave 3 will be the expansion. The structure played out 3x before, and each time Ethereum pumped. So you know what to do in the discount zone. Don't sleep on it. Pick your points. Don't leverage the farm, of course. Trade with your head, not over it, right? So before we leave Ethereum, I'm going to show you something that most traders are overlooking. And, I've been saying we're going to get a delay in alt season. That's my opinion. I got hammered, about it. Like, Tom, no, we got time yet. We still got a couple of months left. Okay, so this was brought to my attention. I want to bring it to your attention because, that's what I do, right? That's my job. So I should have showed this when I was talking about the Ethereum Bitcoin. what a knucklehead, man. So right now, crypto market still feels bearish. And, many people think that's the setup, right? Ethereum versus Bitcoin just trapped a macro reversal zone, the same zone that marked the cycle flip in 2017, 2021, and now it's happening again. Now we got to watch Bitcoin dominance, because each time Bitcoin dominance hit this structure, it rolled over and altcoins didn't just bounce, they went parabolic. So this is the rhythm of crypto, right? Bitcoin leads, The down move, Ethereum, Bitcoin hits a reversal zone, Bitcoin dominance peaks, alts ignite every single cycle. And right now, this chart is actually showing the same signature. Now, we have time, right? But Bitcoin dominance itself, it's very, very high right now. So as we stare at this chart, it's the same signature as the last two alt rotations. Now, you got to pick the right altcoins. You got to pick the right altcoins. And that's why I suggest coming to our pro community. We do help you out with that. Okay. We put all the facts there for you. Okay. Now, just ignore the noise. You got to look for alpha. It's right now, it's not really the time because we come over to Bitcoin dominance. We can see Bitcoin dominance is sitting at what, 59 something again? Yeah, it's still sitting at like 59.06. It's down a little bit. All right. So it's pulled back slightly, but the structure remains bullish. So this tells you money is defensive, capital is still consolidating in the majors, and there's no rotation yet. So as one chart's saying you got to be prepared for it, the last chart I just showed you, this chart's saying you got to chill out a little bit. You just can't jump in. Okay, so we got to get both of these running in the same direction. So Ethereum is not leading. Stable coins aren't flowing into speculative assets yet. Dominance is the truth teller, I'm sorry to say. So when dominance stays elevated during fear, alts remain dead. Morte. That's for sure. If dominance drops while Bitcoin holds, that's the early signal for alt season, and we're not there yet. Okay, that's my defense of the whole thing. All right, so alts right now are completely directionless. Solana is down 6.6, Ethereum is down 0.2. XRP is the only one that's showing a little bit of strength, is up like 1.1%. Well, the last time I looked, anyway. Alts dropped harder during the sell-off and bounced less during the recovery. So this is what is known as a dispersion phase. Capital just runs away from high beta assets. Okay. Alts underperform. Liquidity concentrates in Bitcoin itself. Narratives weaken. Alts wait for confirmation. So it's not a breakout environment. This is a prove it to me environment. Okay. Tell me what you're into. Like what are your projects that you are working on? And alts aren't going to move until Bitcoin clears, I believe, 92,000, 91,000 and 92,000. Ethereum, Bitcoin reverses, liquidity returns, macro stabilizes, ETF inflows resume, and again, we're not there yet. Okay, so before we wrap up, crew, got to make sure, how do you join this community that I keep talking about? Like, how do I get in? I want to get in, I'm especially interested in that DeFi project. Hey, I want to thank a couple of you guys that put out some names there for us. They were cool names. I threw them in the hat. I say, hey, look, this is what our crew thinks. So why not? Let's throw it in the hat. All right, so before we wrap up, I got to tell you about our crypto trading community. It's totally free to join for the 9,000th time. All right, here's the link in the description. You click this link right here, you'll be taken over to our Telegram trading community. We drop insane alpha trading opportunities every day for you. Hey, if you want to go it alone, we offer two outstanding brokers for you here. We got WeX and we got BTCC, both low fees, fast execution. WeX itself offering really great bonuses through our link, and BTCC as well offering great bonuses through our special link. Right now, BTCC is giving a $500 giveaway for all new accounts, and WeX, I believe, is no fees for life. So you should definitely check them out. But what I strongly suggest is you get into our pro group. We do all the research for you. We help. Okay. Now, if you want to go it alone, all right, go it alone. I got nothing to say about it. So here's the bottom line. Bitcoin has definitely broken correlation with risk. Right now, we could see it on the chart. First time in months. Ethereum stuck in the mud, not leading. Alts are frozen or bleeding. Dominance phase is defensive positioning. The macro, you got to look at this thing. Dominance definitely phases, defensive positioning. The macro environment is about to deliver one of the most important data waves in the entire quarter. It's not time to guess. It's time to read the structure, stay disciplined, and wait for the market to show you and reveal its hand to you. We play long term, but we execute short term. We protect our emotional capital. In other words, we do not let losses run deeply against us. Okay, and we protect that as much or if not more than financial capital itself. And we never force trades in a compression phase. So stay sharp. Make sure you come on over to X. Follow us on X, where we talk about Bitcoin, crypto all day, every day. And what do you got to do? Well, you should join our pro group. What else you got to do? Well, you have to trade with your head and not over it. You definitely got to do your own research. As you know, I am not a financial advisor. I am a trader just like you. And as a short-term trader, you got to enjoy the party, but dance near the door. I'll see you tomorrow. Stay safe, stay profitable, trade with your head not over it. Cheers.